Am I audible?
Yes, sir.
Yes, sir.
Yeah, yeah. Hi. So hi guys. No, no. So I've just joined as a student because this is one area which is completely I've got no expertise. So I'm just trying to learn as well, right? And the question that I had in mind was, are these things only known in hindsight? That the pharmaceutical company example that you gave, right? Or do we, or is there any proper framework where we can, use this forensic analysis or whatever you may wish to call it to kind of know them upfront when they're making new highs, or when the story is still kind of live, and there is positive news flow and there is positive earnings, cash, everything. Because I typically look at long range CFO to EBITDA as one, but that's not the only one. I also keep an eye on the receivables, how the receivables are jumping in proportion to the sales, um, as those kind of basic checks. But I'm not an accountant, right? So there is no way I can pick the kind of more complex signals, because the Indian accountants, and maybe generally the accountants, are very creative. If they want to hide something, they will do their best, right? And they have all the expertise to play such games, because that's the reason these stories, they keep happening, and they will be, something or the other happening. It could be a Yes Bank, it could be Manpasand, it could be something else. So my humble request to you is, if you find anything which is even looking slightly fishy, maybe not, is this is a recorded session, I appreciate that. So maybe just DM me or let me know, so that at least I can be extra cautious and careful. So that was my humble request more than the question.
Uh,
And one observation that I have, so I heard you said that peak margins and peak multiple, right? But are these things, how what was peak margin and what's peak how do you analyze what is a peak margin and what is a peak multiple? What's the sort of framework you use to kind of get to this conclusion that, look, the stock is making new high, but it's kind of having peak margins at the moment, and market is giving peak multiples to those peak margins, and the story will mean revert. What sort of framework do you use?
Swarnashish, we cannot hear you. Are you on mute or?
okay, okay. Hello, hello. Am I audible? Okay.
Yeah, go ahead.
Yeah. Uh, so the pharma company example I gave, this is Valiant Pharma. So for that, it was probably possible to understand that there is something going on, because the type of companies they were acquiring, something like Biovel or Bosch and Lomb, Allergen, Medirix. So these companies already had questionable accounting. Okay, and for Manpasand Beverage, 2.2 Capital, Amit Mantri had an article probably 1 year ago where he had explained ki there is something very fishy. Okay, so sometimes it is possible to know beforehand ki something is going on, and if someone like you who has understood the business, and you're in con call, if your narratives and your numbers will not match if there is something going on, and if you go through all three statements, you will eventually probably find it out. And the second thing is about peak margin and peak multiple. So where I already confessed ki, when I thought ki alkyl is at peak margin, it went up another 4x. So my framework is kind of uh, eventually for alkyl ki, it has a consistent margin over a long period of time. And if your stock price has gone up because of both, your operating leverage has played out and your multiple has also gone up, so eventually things will mean revert. That maybe your multiple, probably your margin has expanded because of some uh, benefit in raw material, or something like your other expenses has gone down because there is no traveling or something like that, and then margin will mean revert if you have a history. And And example, I tweeted the peak margin for IOL chemicals also, and in hindsight I was probably almost right. And probably now the margin is probably again very low. Probably it shouldn't remain this low. Okay. And if your margin is probably collapsing, and because of your earnings expansion at a rapid pace, your multiple has gone up too, then there is a probability ki your multiple will also correct.
Correct, correct. So yeah, so I think in cyclical businesses, it could be Chemfab alkalis, right? And that's the, it could be gelatins. Today, it's all singing and dancing a story for the entire gelatin pack. But I think if you look at their historic margins, they've always struggled to secure or source raw materials. You pick any annual report of Nitta Gelatin, any 5 year back, 6 years back, 7 year back, whatever. And today their margins are significantly better than their historic margins. So, I mean, is there anything fundamentally so dramatically different today, and it will sustain? And if the answer is no, then probably that could potentially be a peak margin. That's one. The IOL example that you used, absolutely. I mean, in commodities, the 35 percent EBITDA margins, they don't sustain. A 35% EBITDA margin business is only sustainable when it will have, serious entry barriers, and the competition will be very limited. Cyclicals do make these kind of inflated margins, but it's very easy to figure out what is the inflated margin in case of cyclicals, because we have got history. We can go back 10, 15 years and see, so power example. So recently on my talk last month, I used Tata Power as an example. It was very close to 4 times price to book. So you can see, what historically the stock has peaked somewhere in the region of between 4 and 5 times price to book. So that gives you one indication. But my question is, so cyclicals is easy to figure out. Steel, power, sugar, those are the easier examples. My question is, if I look at something which is much more structural, so hospitals as a business, today they are doing very well, right? If you look into Twitter, there is positive chatter. So no one is bearish. All the research reports are recommending buy, with price targets that are above the current market prices of most of these hospital stocks. And what is peak earnings in, if I let's take one example, and again we are just discussing this, that's the disclaimer upfront, and none of us are qualified enough to form a credible opinion. So this is just an opinion. So please don't transact, buy, sell, or hold based on whatever we are discussing. So with that caveat, if I take example of, let's say, Max Healthcare, the EBITDA margins today are 28%. Is this peak margin, or is this the new normal? Because if I look at the history of this business, I've never seen a 28% margin. So how do we figure that out, where the business itself is sustainable? So hospitals will not go out of business. There is shallow cyclicality is in every business. So if COVID happens, which is a black swan, then the footfalls will drop, and the elective surgeries are off, and then that's the. But how many COVIDs have happened in the last 100 years? So that's an outlier event. So we cannot take that into the consideration. But barring that, the healthcare as a space is pretty structural, right? So the demand is structural. So the question is, to you, my friend, is 28% margin peak for Max Healthcare, and should we offload this stock, or is it still a hold, because we expect margins to either stay near 28%, 27 to 29% range, or we expect margins to go north of 30%. So in either of these scenarios, if the earnings are growing, the sales are growing, and if you look at hospitals as a sector, this is perhaps the only sector where every year, except the COVID year, the sales have grown. So what do you think is the answer?
Thank you for the question, sir. I will answer it something like that. Imagine I have started one business with only one hospital. So initially I will have 10% occupancy, and I will be loss making. Probably at 40% or 35, 40%, I will come at break even. And after that, incremental uh, occupancy with incremental increase in occupancy, my margin will keep going up. And also, if I am owning the hospital or owning the land, my depreciation expense may go lower in future. So my ROCE will also short. And as long as I will be able to increase my occupancy ratio and uh, my margin will keep going up, probably saturated at say 70%, something like that. Now, also, if your ARPO growth is more than your cost, then also there is a possibility to push up the margin by little bips. So as long as there is a not a lot new greenfield hospitals are coming for any particular hospital business, their margins are should remain quite stable, uh, because their ARPO was not going to go down until there is some regulatory stuff, and their expenses are not going to shot up in a hurry. So these margins are sustainable until they are going up for new lot of new hospital capex.
So if the so if let's take this one hospital. So this is the only hospital that is listed, and it has got current occupancy of 78 80%, which is for hospitals that's the peak occupancy. And hospital business will rarely go above 80% in terms of
Yes.
occupancy. So let's assume that this hospital is all full, jam packed, and it's reporting EBITDA margins, whatever those margins are, let's say 30%. How will that hospital grow its sales? So A, you increase price linked to the inflation. So maybe every year you take
Your
5, 10, and whatever is allowed, you take the price
output
rise,
growth. Yes.
right? So
Yes.
is that the only way to grow sales, which is inflation linked? So if in this scenario the best that I could get in terms of sales growth is about 5-6% annualized sales growth, and maybe some marginal operating leverage, maybe or maybe not, because depends, right? If my doctors start asking for bonuses and commissions way in excess of the price rise that I'm taking, my margins may actually go down from 30% to 29%, 28%, or whatever, right? So in that case, the stock will start stalling, and probably that should be the time to exit. What do you think?
Uh, I will think about sales growth. I will completely agree with you because your ARPO growth will be the only driver, and for expenses will also be in the similar line, except your bottom line may have some leverage if you had some debt which you were paying, and your interest expense goes down, or your depreciation expense may also go down as you almost reach the salvage value. And if there is any doctor link incentive and there is one to a 30% business goes to 28% margin, it is quite okay for me. Unless and until 30% business 30% margin business comes to say 22%, I'll be pretty happy, because 1-2% margin fluctuation is difficult to predict. And hospital the changes in hospital uh, has been structural for that one particular hospital, because your it's structural because your occupancy has gone up. Unless and until your occupancy is going down, your margin should be in top percentile.
Mm-hmm, mm-hmm.
Just
Right, right. Thanks.
one thing I wanted to add, Sajal sir and Swarnashish. So how do would you see the the industry level increase in supply of the hospitals? And let's say, because in my opinion, the margin should be actually the function of what is the delta in supply and the delta in the actual demand for healthcare. So do you think this would,
So
yeah.
yeah, I mean, so again, I see Aditya Bhai has also joined, and he's the hospital champion. So I'll just chime in my initial, and then I would definitely invite him because he can't be a listener. First of all, that's a crime. And so, in terms of your question, Shashank, my sense is healthcare is a local business. So any capacity or supply side equation, if you are looking at, you have to look at from the regional perspective. So NCR as an example, if a hospital is quadrupling capacity in Bangalore, that may not have any material impact on NCR, because people don't like to travel unless they have to travel for healthcare. Nobody enjoys traveling for healthcare. unless there is a significant cost arbitrage, which is heal in India or medical tourism, whatever. Well, people call it tourism. It's not tourism. It's kind of value travel or whatever. So I think we have to look at what sort of capacities are coming locally, but more importantly, what sort of capability that hospital has. If it's a multi-speciality hospital with a very similar brand, so if I compare Medanta with, let's say, Max, I mean, if they are comparable, then yes, you can say that there is a supply coming in. But if it's a super specialty hospital, which is specific in a certain domain like cancer care as an example, even if the multi-specialty hospital is increasing capacity, I wouldn't be overly concerned about the cancer hospital, because there are certain technologies and certain procedures that are critical for a specific ailment, so cancer in this case. So if a multi-speciality hospital is increasing bed capacity, that may not cannibalize the cancer specialist in the same region. That would be my take on your question.
Yeah, it's a very, very good point actually, because the specialty hospitals are going to, like, remain in the niche. Yeah, that's, I think, right. Thank you.
Aditya bhai, please.
No, sorry. Hi, good evening, everyone. I couldn't catch the question. I'm sorry.
So the question was on the supply side dynamics and how can we measure. So healthcare, the demand is never a concern, right? So demand is a given. Then we have to look at what's the supply side looking like, whether it's APIs, whether it's hospitals, pretty much. So my sense was that the healthcare is a local business, right? I'm not sure if you heard my response, but the question was, how can we measure supply coming in the hospital sector, and so that we can take an informed decision in terms of whether we still want to hold on to our assets or it's time to liquidate and run away.
Yeah, so that's fair enough. I did hear your reply in part, Sajal bhai, but I am not sure. So let me add my couple of points there. I think uh, we are not at a stage in healthcare where, at least in hospitals, where we can even talk about demand and supply. See, you talk about demand and supply when demand is, let's say, 1.2x or 0.8x in that range of the supply. Then you bother about, whether there is more supply, then what will happen to market share and what will happen to occupancy. These things are things you worry about when that is the situation. Um, in the latest estimates of some of the reports that we read, in these IPOs that the companies recently filed, so India needs 10x times more beds than it has today in hospitals, and that is the demand supply gap that exists. So that is at a very macro level, responding to the point that demand supply to आज के date में concern है ही नहीं. It's not even a concern. The demand way outstrips the supply. Obviously, what you have to understand in hospitals, and I think very few people understand or talk about it. Uh, there are multiple levels of hospitals. You can get say some surgery done for 2,000 rupees. The same surgery you can get in 5,000 rupees, and the same surgery you get in 10,000 rupees. It depends where you are going. And if you are going to a government hospital, you may get it for free also if the doctor comes to the hospital and it actually bothers about performing the surgery. So zero B price point at 2,000 B price point at 5,000 B 10,000 B. It's just like a hotel, right? In that sense, where the price points are very, very different depending on the kind of service you expect from the institution where you are going to. So if you talk about the top end where, RPOBs of 50,000, 60,000, yes, their demand supply dynamics may be slightly there, where we are talking about some saturation, let's say markets like Gurgaon, markets like Hyderabad, markets like Chennai, some saturation in terms of occupancy because most of the facilities in these three markets specifically are in the range of 65-70%. But if you look at other markets, prime Delhi, prime Mumbai, prime, any other prime localities, uh, majority of them basically are doing occupancy levels of 70-75 plus. Um, and that is basically the best occupancy hospital can run at. It cannot run at 95-100% occupancy because you have changeover times and all that involved, and you have daycare procedures. So these two reasons, the occupancy cannot really go up to 100%. Um, so primarily, my response will be that at a lower price point, the demand is humongous. So, companies, hospital chains that are focused more on the tier two, semi-urban, rural, there the demand supply gap is humongous and demand way outstrips supply. On the very, very metropolitan areas of, let's say, a Gurgaon or a Hyderabad or a Chennai, there is some saturation, even partly Bangalore. There is some saturation because the population is limited and there may be too many healthcare facilities around. But then again, as you said, it comes down to specialty. So, multi-specialty hospitals will have a different audience, super specialty audience will have a different audience, and so on and so forth. सो ये इतना मदरहुड स्टेटमेंट नहीं मार सकते कि हेल्थ केयर का सप्लाई बढ़ रहा है तो क्या करने का है. दैट्स अ वेरी मदरहुड स्टेटमेंट. सो गो हॉस्पिटल बाय हॉस्पिटल. सो लेट्स टॉक अपोलो. सो टॉक अपोलो चेन्नई. कि अपोलो चेन्नई में एक हॉस्पिटल है, वहां पे सप्लाई बढ़ रहा है, देन व्हाट हैपेंस? यू नो that is the level of detail you'll have to go to. And then Apollo doesn't have one, it has 70 hospitals. So you have to talk about all 70 hospital demand supply if you have to take a view that way.
Sure, sure. No, so that's helpful, Aditya. Maybe a follow-on question. So let's take two hypothetical examples. So let's not name any specific hospitals. Then we can discuss more freely. So there are two hospitals. One is a multi-speciality, and the other one is a super speciality. The multi-speciality is at let's say 27% EBITDA margin, and the super speciality is at 33% EBITDA margin. So there is 500 basis point or 600 basis point delta between the two, which can be explained, right? So super speciality by the very definition can run at a higher EBITDA. All things equal, of course, right? So can these margins, 27% for multi-speciality and 33% for super speciality, can these margins be assumed to be kind of near peak, if not at the very peak, from a valuation perspective? In the sense
so that's a good
the
question.
story cannot get any better. Yeah.
That's a great question, Sajal bhai. And I'll share my view. I may be completely wrong here, but I've done the math. I built a model, a 30-year-old model on hospitals. So you have to understand, India healthcare ecosystem, India private hospital ecosystem is not more than 40, 50 years old. You're not talking about an ecosystem which is hundreds of years old. So you don't have much of a history, to be honest. I mean, I think Apollo Hospital, which is one of the oldest hospital chains in India, they started sometime in 1980s. So ज़्यादा टाइम हुआ नहीं है हॉस्पिटल्स को. सो प्रॉब्लम क्या है ना कि आपका जो हिस्टोरिकल, सो द historical data set that you have, that data set isn't mature enough to give you these signals. You have to understand that. So initially, so let me break this down further, step by step. So initially, Apollo hospitals, whatever, I'm taking Apollo as an example. Nothing against them, nothing for them, just as a case study, as an example. When they started opening hospitals in the 1980s, they used to own the land and building of the hospital. So EBITDA margins used to be high because you're not paying any rentals, right? So you own the land, you own the building, but ROICs were low. Because ROIC was low because your balance sheet is heavy. You have to take debt to open a hospital, right? And therefore, while EBITDA margins used to be high, ROICs were low, and the business took a lot of time to ramp up because we need that kind of cash flow to have enough cash chest so that you can open the next hospital. Because the next hospital, again, you'll have to buy the land and building. That is what we aspire to do. As time went by, of late, I would say the last decade, we have seen more hospitals on the asset light where the land and building is actually leased, which is what is helping these chains to expand faster. Because now, with the same war chest which you had earlier for one hospital, now in that war chest, you can open 3 hospitals because you do not want to own the land and building. You want to only own the medical equipment and the AC, etc., etc. So you are just, leasing everything else. And that is basically enabling you to expand faster. Now where do margins fit in, right? So India is still a 70-75% out of pocket market, right? And insurance business is still like between 20 and 25 and 30%, depending on each micro market is different, but the range is about 20 to 30%. The point I'm trying to make here is that we haven't seen hospital margins peaking yet. See, pre-COVID, the average contribution of medical tourism to hospital revenues used to be between 10 to 20%, chain to chain. Today, these hospitals are between 8 and 15%. of their medical tourism contribution. Obviously, COVID mein medical tourism contribution went down to zero because flights were not operating. Um, Now it has gone down to now it has come back up to 8 to 15%. It will go back to 10 to 20%, which was the historical number, but it will go beyond that because India also has now Heal in India initiative by the government, where they haven't actually announced what they will do, but they are looking at fostering medical tourism because they want to promote India as a healing destination for rest of the world, given the low cost advantage that we have to compare to the rest of the world. So clearly, the government is hell bent on marketing India as a healing destination, as a medical destination, and why shouldn't we? I mean, we have all the ingredients to make one. So my sense is that over the next 5 or 7 years, you will see medical tourism being 20-25% of top line for most of these chains, whereas the historical peak was about 50-20%. So you will see a higher number here in terms of the contribution of medical tourism. Now, why is that important? Because medical tourism is a very high margin business because you charge these patients higher than you charge a normal Indian patient, but the service and the cost of serving the patient is the same. So hence your margins are higher. Um, Also, what is happening is, see, hospitals. Uh, I don't know how else to put this nicely, so I will put it in the way I understand it. Uh, Most of the hospitals have no rack rate. Okay, so when you go into a hospital, and you tell them that okay, I'm ill in this fashion, they don't give you a quote that this is okay. If you have cancer, breast cancer, please stand here. If you have arthritis, please stand in this line. And if you are, and this is the cost for an arthritis package, this is the cost for a breast cancer package, this is the cost for this package. They don't do that. They make you fill out a form. They ask for your insurance details. They ask for how much insurance you have. They ask for your income. They ask what you do as a profession. They ask you for all these details, and then they go about treating. So as the income of people is rising, my sense is hospitals will be able to do better RPOB because they end up basically pricing their service according to the income of the patient who comes in, right? So two guys can get a bypass in the same hospital. One guy can get a 1 lakh rupee bypass. One guy can get a 4 lakh rupee bypass. It will purely depend on the quality of the stand, the doctor who attends to the patient, and the pre-surgery and the post-surgery care that both of them get. So it's not that its pricing is different just because the patient's paying capability is different. The pricing is also different because they serve you differently because they know you can afford that service. Okay, so so my sense is that as the GDP of India goes up, as the average disposable income of an average Indian citizen goes up, hospitals is a leverage play on that. You have to understand that. वो फॉर्म क्यों भरते हैं, that is a very very, and उस फॉर्म में इनकम का इतना डिटेल्स क्यों है, that is very very important to understand. I hope that answers your question.
100%, 100%. Very well explained. Thank you. Thank you.
Thanks, Aditya sir. So,
Aditya sir,
yes, Shashank.
just one question, Aditya sir. Sir, in hospital business, what are the parameters that you look for in your sell thesis?
In
Like,
my
what
self
would make you sell
thesis,
hospital? Yeah, like
absolutely.
antithesis.
So biggest parameter on which I even consider studying hospitals is forensic accounting. So I do not want to name any, but there are a couple of hospitals which are listed where the cash flow just doesn't make sense compared to the EBITDA and the PAT that they report. The cash flow just isn't there. So that's point one. Point two, a sell thesis could also come from, as you said, as your original question was, Shashank, if I understood it correctly. So let's say if I am a hospital and I have two hospitals, one in Hyderabad, one in Bangalore, and these micro markets are facing some saturation in demand supply, right? So if the micro market, and I'm a multi-specialty. So if I'm a multi-specialty and I'm in Bangalore and Hyderabad, I will give a lower multiple to that hospital because I know the ROIC that they'll be able to make will be low because their occupancy rates will likely be low. Okay, but I may be a super specialty in Bangalore and still doing great. So just because it's Bangalore doesn't mean a lower multiple. It depends on what you do in Bangalore and where are your facilities and how many facilities in and around the 5 to 10 kilometer radius of your facility, so on and so forth. So each micro market study करते हैं हम लोग. Obviously forensic accounting study करते हैं. Obviously management का diversification study करते हैं. So one of the largest hospital chains in India, they have diversified into online pharmacy, retail pharmacy stores, clinics. So do you consider these as positive diversifications, negative diversifications? Will it be good for your balance sheet, bad for your balance sheet, good for the cash flow, bad for the cash flow? You have to decipher that. And most hospital chains like to diversify. Um, I don't necessarily feel that's a good strategy. I can name another hospital chain today, which is a very small hospital chain. It is undiversifying. So it had diversified earlier, but now it's selling the non-core assets and it's focusing on just the one thing they're good at. Now that's the asset I would like to own. I would not like to own the other asset, which is just, carpet bombing the entire industry कि मैं ये भी करता हूँ, वो भी करता हूँ, वो भी करता हूँ, and देखता हूँ कहाँ से पैसा बन जाएगा. That's not the way of doing it in my view. I mean, that's my personal preference as an investment manager. So that's the third antithesis. The fourth antithesis generally is from RPOB. So see, RPOB is a function of case mix. RPOB is a function of pricing power. RPOB is a function also of reducing ALOS. Now, if your RPOB is not growing at least mid-single digit over long periods of time, see, year-to-year fluctuation आते हैं. Some year your RPOB can be flat, some year it can grow 10-15%. That's okay. बट अगर आपने ओवर अ लॉन्ग टर्म 7-8% जो अपना एवरेज इन्फ्लेशन रहा है इंडिया में, उतना आपका आरपॉप ग्रोथ नहीं है, देन द नंबर्स आर टेलिंग यू कि प्राइसिंग पावर नहीं है. Okay, your cost of service is actually your actual pricing is actually lagging inflation. So if that is the case, then that's another antithesis. So yeah, I mean, these are some of the points. There are multiple antitheses, Shashank. बहुत सारी चीजें हैं.
That's, I think, very insightful. So just the last point, that if I got it right, the revenue per unit, per bed,
Yeah,
basically has to grow in line with inflation.
in line or better, na? I would ideally
In
want
line, yeah, yeah,
100%.
at least. I
Huh.
mean,
At
at
least
least.
in line with inflation. At least in line with inflation, and hopefully better than that.
Yeah, because that, I think that would also give you the indication that supply is growing regionally,
No,
which
अगर
they don't have
ARPOB
the
is growing
pricing
more
power.
than inflation, if
No,
ARPOB is growing,
in case it does not, I'm saying, in case it
in
does
case
not.
it does not, then maybe there is pricing pressure, supply, or the case mix is not improving, or in fact deteriorating, or the ALOS is not improving, in fact deteriorating, or occupancy is not improving or deteriorating. Doctor attrition reduces ARPOB. ARPOB is a fantastic metric, boss. It captures so many things. Doctor attrition capture hota hai RPOB mein. You had a star doctor called Mr. Trehan somewhere. Mr. Trehan left and started on his own. That institution's RPOB fell after Trehan went away because the prime patients who were coming for Trehan went to Trehan in the other institution. So RPOB गिर गया. Now doctor attrition को hospital आपको बताएगा नहीं, आप पूछोगे तो भी नहीं बताएगा. But उसका RPOB बता देगा आपको कि उसमें doctor attrition है.
Excellent.
Thank you, sir. So, Vineet, you had a question. You can ask your question.
The question was to Swarnashish actually, but since we have moved to hospitals, etc., I wanted to know more on hospitals actually from Aditya ji. So, Aditya ji, I had a small question. Major large chains of hospitals in big metros have got land from the government, and most of them offer the patients which are under government schemes like CGHS or DGHS have the panel covered with their doctors. So what I wanted to understand was, do the hospitals give the kind of breakup for these kind of facilities which they are giving to the panel patients, because their revenue from the panel patients are much lower as compared to a cash patient.
So most hospital chains, they don't probably. So some of them report it, I think, and so they have something called a payer mix. In the payer mix, they tell you whether it's coming from insurance or out of pocket. ये बस इतना ही detail देते हैं. Some of them also give private insurance अलग से and government insurance अलग से. So schemes like ECHS, CGHS would be under government insurance schemes, and then you have private insurer players like your whatever Tata AIG or SDFC Ergo, etc. And then obviously you have the out-of-pocket guy who is paying basically cash and is not insured. So some hospitals give it on their presentations. Some of them just call it out in the con calls if somebody asks them the question. Otherwise, they won't call it out.
Because what I gather from my own experience is the government insurance, the CGHS, DGHS panel rates are far lower when they try to get it from the government, and hence the realization from that insurance will be much lower as compared to a private insurance. Am I correct in my understanding?
Yes, you are.
All right.
So that goes for any government scheme, to be honest. All government schemes have lower pricing than what private insurers give or what out of pocket gives. Obviously, out of pocket guys pays the most, followed by private insurance, followed by government insurance, which is why if you hear con calls of Max India, for instance, Max Healthcare, for instance, so Max Healthcare will tell you that they actively are trying to reduce the payer mix of government insurers, and that is helping ramp up their ARPOB.
Thank you,
But
Aditya ji.
हाँ but उसमें इनका obligations भी होता है. So if they're taking money from the government, if they're taking cheap land from the government, there is a commitment that these guys have to give to the government that 20% of our beds will be occupied at any point in time by government patients. So
हाँ जी, बस वहीं पर ही गाड़ी अटक जाती है इन लोगों की. लैंड तो फ्री में सस्ते में मिल जाता है, पर बाद में they don't want to give services to those people.
So where are you based out of, sir? Sorry if I may ask you that.
I'm based out of Delhi and I'm a Max customer also.
You're a Max customer. So आप Max आके जाके चेक कर लो, आपको पता चल जाएगा कैसे मैनेज करते हैं.
मैं शालीमार बाग मैक्स में मैं गया हुआ हूँ और भी मैक्स हॉस्पिटल्स में मैंने अवेल की है सर्विसेज. हर जगह पे पैनल पेशेंट्स आर नॉट ट्रीटेड प्रॉपरली.
Exactly. Price is equal to service. Simple equation है. मैंने क्या बोला था, 2000 में भी ऑपरेशन होता है, 5000 में भी होता है, 10,000 में भी होता है. प्री ऑपरेशनल प्री सर्जरी केयर भी होती है, पोस्ट सर्जरी केयर भी होती है, और डॉक्टर भी अलग अलग होते हैं.
हाँ जी, हाँ जी.
तो आपको 2000 में भी मिल जाएगा वो ट्रीटमेंट, आपको 10,000 में भी मिल जाएगा, बट क्या ट्रीटमेंट मिलेगा वो डिपेंड करेगा कि आप 2000 पे कर रहे हो कि 10,000 पे कर रहे हो.
जी जी.
सेम एज अ होटल ना, आप एक यू कैन गेट अ बोल ऑफ नूडल्स for 2,000 rupees at a Hyatt, or for 200 rupees at a Ginger Hotels, or for 20 rupees at a roadside dhaba, right?
जी बिल्कुल. एडमिशन के टाइम ही पता चल जाता है, बिकॉज द मोमेंट यू आस्क फॉर एन एडमिशन इन अ पैनल, they right away say that we don't have a bed, and the moment you say I have an insurance, the bed is available.
That's the whole point, right? So देखो even Max आके there's an occupancy of 75%, and वो तो reported number है, public number है. Yet वो पैनल पेशेंट को बोल देते हैं कि बेड नहीं है.
जी right? जी बिल्कुल.
Pramesh, you can quickly unmute and ask.
Guys, I have only 5 more minutes, so if there are any questions for me, I'll take 1 or 2 last questions, or else I'll drop off.
Yeah, Aditya, the question is for you. I just wanted to ask you, with respect to hospitals, you would prefer, from a preference point, a niche hospital or a multi-specialty category?
Sure. No, that's a valid question. Honestly, while I have been talking a lot about super specialty versus multi-specialty, and I have been sort of showcasing my preference over super specialty versus multi-specialty, I have to be honest and say that I'm not, my investments are on both sides. I own 2 hospital chains, one in multi-specialty, one in super specialty. It's all a factor of how you see earnings growth, how you see ROIC improvement. Is there some corporate action, a demerger, or a split sort of involved in the business? And end of the day, see, a multi-specialty is owning a multi-cuisine restaurant, super specialty is owning a authentic Chinese restaurant kind of thing. So both the businesses can make money if run well. Both of the businesses have their own audiences. And you have to see at what valuation you're getting, because end of the day, we are sort of running a business in which we have to deliver returns for our clients. So the idea is to see the risk reward at any point in time for any business model. And if the risk reward is tilted in your favor, you go for it. I mean, that's broadly how we look at it.
Thanks, Aditya.
Yeah, it just so happens that at this point in time in India, there is one super specialty which is extremely cheap. So, that's a very comfortable bet for us. And there is a one multi-specialty which is extremely cheap pending a corporate action, which is again a very, very comfortable bet for us.
Yeah. Oh, thank you.
Swarnashish, we have Hiram. Hiram, you can quickly ask your question.
Yeah, thank you.
Who is it for?
Yeah, thank you. I'm from Bangalore. See, my question is, are there any of this hospital groups planning to have a separate facility for preventive, that means where they don't mix up the curative patients. It's only for the preventive, because as a healthy person, I don't want to go to even doing a regular test into the regular hospital. Is there any plans with any of the groups?
Should I be taking that, Prince?
Sir, this question is for you.
Okay. No, so I am not sure what you mean by preventive health center. Uh, Generally, these hospitals, some of these hospitals have clinics, and these clinics are not hospitals. They are essentially OPD clinics where 2 or 3 or 5 doctors will come and sit, and they will see patients and they will diagnose them or recommend medicines to them. Um, so an OPD is essentially a place where you filter the preventive and the curative part, where people who come, they're not feeling well or they're scared. The doctor looks at them, gets some tests done, and will tell them that, look, you're healthy, but you need to take these things and be sure that you don't fall ill. Or the doctor will say that no, you are ill, you need to be admitted, and we need to perform XYZ procedure on you. So the OPD is where the preventive and the curative part sort of gets culled out for any given hospital. So all hospital chains have OPD clinics within them. Some of these hospital chains have OPD clinics within the facilities and outside standalone clinics as well.
Actually, I'm in Bangalore. There is a center called Neura, which
Mhm.
does exclusively diagnosis only for kind of preventive health care as such. Actually, so is there any other groups also planned? Because it's a very niche segment.
Yeah,
Very high income individuals, they want to be treated like a spa when they come for a
I
just
understand.
medical
Yeah,
checkup. Actually.
I understand. I got your point now. So no, preventive healthcare in that sense is mostly done by startups today. It is not done at scale by any of these by any of these listed entities, simply because in India, the general trend is that people don't want to go to hospitals unless they are feeling sick. So preventive causes very few people go to hospitals or doctors for that matter, which is why this business isn't really scaled up, and most of these large entities aren't really focusing on that business yet. But you're absolutely right. That is an area which is growing. Mostly high income individuals worry about their health a lot more, and they're willing to spend that extra buck to ensure that they don't fall ill, and therefore they visit such facilities to ensure that everything is all right with them.
Absolutely. I think, thank you. In fact, the health checkup, in, for example, this Neura, they charge anywhere between 25,000 to 30,000, and they get a good number of clientele there, actually.
Yeah, absolutely. I mean, you should. I mean, from that sense, if you want to sort of look at the study that space, there are spaces that do detox, Vipassana. There are places that do curative dieting or preventive diets for again 2, 3, 5 weeks programs. You can look at their pricing. Yeah, it's goddamn insane. But it is not meant for the average Joe like us. It is meant for the guy who
No, no, no.
wants.
Now they are having good tie-up with some of the corporate, and as part of the package, they in fact are trying to give this as okay. If you are above this grade, you will be having this in Neura, something like that is happening, actually.
So if they're doing corporate types, which means their occupancy isn't good because corporate types, obviously the realization will be low. So which means they're not getting their occupancy right, and which is why they're going for bulk volumes, which will come at lower pricing, but nonetheless it will help to utilize the facility that they might have created.
Okay, thank you.
My pleasure.
So Aditya sir,
Prince,
one last question, 1 minute. We would request you like two
sure.
cents on today's topic of financial shenanigans. So few
Yeah.
pointers like how we can identify the red flags if you want to.
Yeah, Swarnish is the champ here. So he's the best guy to respond. But my 2 cents here will be that. So I have said this earlier also. I read annual reports from the back to the front. Mostly the things that the management doesn't want you to see or read is at the end of the report. So read it from back to front. Mostly, majority of the annual reports you will leave midway because you realize that you don't want to touch the company. Then obviously there are a bunch of financial ratios and screens that we run. We run just example CFO to EBITDA, right? So how much of your profit that you report in the P&L is actually translating into cash flow? Then we look at numbers like interest income divided by average cash. So if you're showing cash on the books, are you earning any interest income on it? If you're not earning interest income, that cash probably doesn't exist. Related party transactions as a percentage of total sales. Contingent liability as a percentage of net worth. I mean, these are some examples. There are thousands of certain ratios that we run. And these ratios help us to understand if the promoter or the accountant in the company is being fair in the way he's created the P&L balance sheet and the cash flow. So yeah, I mean, these are some of the things we do. I don't know if that responds that helps you understand. And obviously look at the promoter level activity. So that promoter in this business might be a 70% stakeholder, but what else does he do? What are his personal investments? Is he leveraged in those personal investments? Is he pledged the shares? What does he do with the money once he pledges the share? Do some scuttlebutt channel checks. I think these are the things there which help us to cull out some of the dirty names historically.
Great, great. Thank you for your time, sir. And yeah, thank you so much. And
No, I
even
came to here to Swarnashish. Swarnashish, man, let's speak later. I